And, of course, Samantha LaDuc. We know her. She runs LaDucTrading. She trades online for thousands of investors out there who hope to do as well as she does one day. Obviously, a lot of the retail trading community knows who you are. They watch what you do online and everything else. I wonder what's caught your attention right now. We've got only about 27 minutes to go before the closing bell. What are you trading?
All right. Well, as you know, I'm a macro to micro analyst, educator, and trader. So my job is to really run a live trading room for active traders and investors to help them chase as well as position for both swing and trend timeframes. So some of the stuff that I'm going to show you, I'm talking my book, they're already in play. One new trade just yesterday, but these are trades that run for several weeks. So let me kind of go to that right now and get through 5 of the top ones that I am working with clients. And first and foremost, this is actually a Slack workspace. So I'm posting everything here. November 1st, my baseline bet was that the SPY would increase to about 4130. Okay, so SPX 4130 is still in play. Nothing has changed. I did an IBKR podcast and the same that was on November 2nd, and basically it was all based on mechanical flows. Having said that, fast forward now, the month of November is over. I still see it, obviously. We're really, really close, but I also see its last leg. So I really think that we're going to have weakness come in. One of my other positions that I recommended to clients was long bonds, and specifically TLT to about 106. ZB to about 129. TLT is not there yet. That's a retail bond trading ETF. ZB is on its way. The other is just to kind of update why I see this. And it's basically, we're all, believe it or not, even if we're chasing momentum, we're all bond traders now. We're all trading bond proxies in tech. And I know tech is a darling, but I think it has one more very large leg down to go before tech is safe. I talked about that at the beginning of the year. We've had a very strong pullback, and yes, we've had some very strong bear market rallies, but I don't think it's done, and I have discussed that with clients at length. But recently, showing this kind of 10-year, by the way, this is a fractal with the German Bund, there's a head and shoulder forming, which is very bullish for bonds. So the head and shoulder formation is something I enjoy finding it at extremes. In other words, when it's very overbought or very oversold. And it can also be a continuation pattern. So it is true that bonds this yield index can move higher, but for right now, we've already broken a key level of 3.67%. So that just kind of adds evidence to this bond rally. And I think that as long as we stay suppressed in both the 10-year, as well as VIX, as well as the dollar, then this will give more credence to this higher bond trade. So this is TLT, very popular instrument for retail traders. SHY is another one, MUB, HY, there are tons. But the point is, this one has been a really good instrument of mine that I've tracked since August of 2020, when I called bonds are done going up, which meant yields obviously are going to start rising with inflation. And I had a very big thesis of things over paper. So that's really been a trend that hasn't changed. So moving forward kind of into this new position, which, by the way, I still see bonds higher. TIPS is new. TIPS is a particular ETF that is thinly traded for the options market. The other products, I have options, but this is stock, because otherwise, if you notice the option activity, if we get a minute, I'll be able to show you that. It's very thin. So if you're coming into TIP, you're actually making the market. But for the most, unless it's very near duration, and I recommend this January, February, March timeframe. Anyway, this has been consolidating for 2 months. There's a lot of meat left on the bone for this one long. So the other positions, as I've mentioned, they have been already in play. It was very much a call of mine on October 21st with Bank of Japan yen intervention.
Oh, yeah, I remember. Yeah, sure.
A strong bid in yen and gold, and bonds stopped going down. So this is the only stock position. Otherwise, this is another reason for macro, why I study macro, to then translate that into stock positions. This is the dollar yen, and it is falling quite strongly since that Bank of Japan intervention on 10/21, which has given support for stocks, bonds, currencies, FX, gold, etc. So it's already sliced through the 200-day, and I think it has some more room to go on the downside, which would be supportive of these trades on the upside.
Okay, so we got the macro trades there. We got some currency with the dollar yen and things going on here with the long-term treasury side of things.
All right, so I have two trades actually that I implemented recently. This is the Dow versus the NASDAQ. It's a very, very wide divergence. A lot of this is pent-up energy. In other words, there's a lot of folks that are hiding out in XLE and related oil and gas plays. They have been phenomenal outperformers over tech, obviously, for this past year and also last year. So by a nautical mile. I am very worried about diamonds being extended and coming back down, as well as XLE kind of rolling over. So I actually have two that I initiated, a little bit more time, because I'm, again, running the trading room and analysis and the rest. I want to add time to my options positions that are more swing than day chasing. But I have a January $340 put in the diamonds short. So it's about $6.50, and I have XLE short. I actually have three positions because I have a lot of trends that are oil and gas. In other words, 1/3 of my trend basket is basically oil and gas plays that have been very profitable the past 2 years. So I have a January for XLE. Again, this is in the event that we're going to have a pullback in diamonds. It also offsets that kind of bullishness in SPY and that basket trading I talked about before with yen and gold and bonds and stocks. December $90 put for XLE, as well as a put spread, 91/86, and that's in February, and even a little bit of January $87 put. So I'm more of a directional trader, and I am basically always debit, unlike Tom, who's more credit and selling and collecting premium. So those are the two I just wanted to go over real quick.
All right, that's great. So again, positioning for some downside there in what's been a relative outperformer in the Dow Jones Industrial Average, certainly versus the NASDAQ and the S&P 500 to a lesser degree. And then also, of course, looking at what's happening with energy. It's been a monster momentum-wise, despite the fact that oil prices have been falling.